Welcome to another episode of Around the Grounds with the Property Baron. It's the 8th of May 2026. I'm Jason Barron. Each week I'm joined by Nick Meredith, our Brisbane partner, and Hugo Fonseca, who leads the Property Baron Invest. This is where we catch up, we share what we're seeing around the grounds in Brisbane, Noosa, the Sunshine Coast, and also what's happening in the investment space out there. No headlines, no hype, just real conversations, real insights, and what's actually happening on the ground in the property market right now. Last week we've been seeing a few things. The RBA lifted the interest rates. Sydney and Melbourne markets seem to be coming down a little bit. Brisbane up, bucking the trend. We've seen land values up in Southeast Queensland. Stock levels across the board seem to be increasing as well. So looking forward to getting in and getting your thoughts on it. How are we this morning, gentlemen?
Very well, thank you. Bit cool though. Temperatures dropped.
Yeah, it dropped overnight. Look, who wants to go first, Nick? How's Brizzy going at the moment?
Yeah, it was good. It was a pretty quiet weekend last weekend with the, it was a long weekend. It's been a bit of a messy period, actually. A lot of short weeks, which we find at this time of year that sort of get in the rate away a little bit. Speaking to agents, there's, as you said there, it sounds like there's quite a bit of stock about to come to market, which is pleasing. Been one of our real battles for the last probably 12 months. There's a shortage of stock available, but if there's some coming to market as much as what they say there is, that'll maybe tilt the playing field a little bit more our way than it is now, which will help us and our clients. So yeah, it's a bit unusual to see stock coming on as we head into winter, but maybe it's just a little bit of a change in the market. People are happy to just put their houses out there now. So yeah, it could be some good times ahead for us.
Yeah, it is interesting. Usually the market starts getting a little bit quieter this time of year. So if that is the case, it'll be interesting to see what happens over the next couple of weeks.
Yeah, absolutely.
You mentioned you were looking at the auction clearance rates again. After last week, we spoke about the trending down. What are your thoughts there?
Yeah, I was, Domain put out their figures every week. They were down last weekend. I'm sure everyone would expect that being a long weekend. There was a lot of people away, but they were interestingly down 9% on the exact same weekend last year, which was a long weekend. So it's a pretty good, thing to compare it with, which was interesting. 9% is a pretty significant amount. Did notice, particularly in the prestige market, there's been 4 or 5 really good quality high-end properties come to the market this week that are all going to auction basically in 3 to 4 weeks' time. So that'll be really interesting to see what the clearance rates are like there, because we're talking, 5 million up to 15 million. So one of Brisbane's leading agents, probably Brisbane's leading agent, put it all out in one day, just put the 3 luxury properties on. So they've clearly got a strategy around it. So it'll be interesting to see how that plays out.
Yeah, very much so. I don't know if you saw during the week, but we were looking at an article that was talking about the prestige markets in the big cities. And they were talking about Sydney and Melbourne going backwards a little bit, but Brisbane bucking the trend in the property, in the luxury space, and values increasing through Brizzy. Perth was actually a big performer as well. Did you see that one?
Yeah, I did see that. I think that was on a global level too, wasn't it, on where the prestige market was going? But yeah, Brisbane's been really strong in that space for probably post-COVID now. It's just been tearing along. Luxury a few years ago was 2 to 3 million. Well, that's just a standard house now in some of these inner city suburbs. The luxury market's really kicked on. And when you go to the auctions for the luxury properties, the ones that are marketed and done well, there's no shortage of registered bidders. Yeah, it's very strong. And I guess once you're up in some of those markets too, interest rates aren't so much of a factor for the people that are looking to buy in those markets. So I think that'll continue to be strong in the foreseeable future.
How's the open homes going last weekend out and about? I know it was a long weekend. What was the activity like?
Yeah, pretty quiet. We were out and about. Where were we last weekend? We were looking at prestige units, I guess you would say, high-end units, and that was pretty slim pickings for people out and about. There's some good stock out there. A lot of agents and a lot of vendors keen to negotiate. Some of them have been sitting on the market for a little while, so there's definitely some good opportunities in that space. But overall, it was quieter than it has been for sure.
Yeah, well, it will be interesting to see how it goes if stock comes on the market, because we've had a real low stock environment for a period of time now, right? So if it starts to increase and the buyer demand doesn't keep up with it, it might shift the market a little bit. What's your space?
Yeah, well, we've been down roughly around 22% on overall listings for the last 6 months. So that's a pretty significant number. So if we can get back up to where Brisbane normally sits, it could be a very interesting market.
Very good. What's been happening in the investment space, Hugo?
Probably similar to what Nick's been seeing. So we had a few weeks recently that we called out. There wasn't a lot of stock coming on on the market, not a lot of listings, etc. And talking to a lot of the selling agents, they were saying exactly the same, that they were having to work a lot harder to get listings. And once they did come on, they went pretty quick because obviously everyone's waiting for them to come on, and the few that do come on then get pounced on, I guess, for lack of a better description, by buyers. But now it is starting to shift, and even just this week in the markets that we're monitoring and that we're actively investing in, all of a sudden there was a lot more listings come on, and the selling agents that we speak to have indicated that they have more coming. So it's very, very similar to what Nick was saying. I think with this additional interest rate hike that just happened this week, you'll have a combination of people that might start to feel the pinch a little bit more and may need to offload potentially the investment properties, etc. But also there's a bit of talk, and you know how the media work. It's either all boom or all bust. So all of a sudden, it's very quickly. Then there's talks about downturns and whatnot, and it influences people at the end of the day, influences behavior. So I think we're going to have a few people thinking that we've reached some sort of peak and trying to capitalize on that and try and sell before the supposed downturn comes. So in a way, they may end up causing a bit of that by doing so, and we'll have better prices and better conditions in the market to get some really good opportunities.
We're already seeing that for our investor clients, aren't we? We've got some really good properties under contract last couple of weeks for good prices.
Yeah, absolutely. Below asking price, and yeah, some really good value ones. I'm also seeing even some listings that came on this week. As you know, we do a lot of very comprehensive due diligence on all the properties that we look at, and just looking at the history of them. There's a few that were on the market just a little while ago, a few months ago, up to a year ago, and didn't sell at significantly higher prices than they're on the market now. So some of the vendors are starting to get that FOMO, I guess, that fear of missing out, and trying to get the best possible price that they can get before this expected downturn that they're seeing may be coming and is possible.
What do you think is going to happen as a result of the RBA lifting the cash rate this week?
This one was a really interesting one because if you follow it closely, you'll see that they're sort of butting heads, the Reserve Bank and the Treasurer, and having some disagreements, some public disagreements via the media as to what they think should or shouldn't happen. The reality is interest rates are a reactive tool. They go up after inflation comes out or after the data comes out to try and slow down the economy, or they go down in the opposite direction when things aren't great and we need to stimulate the economy. So it's not the interest rates that create a bad or a good economy. They're just reacting to whatever's already out there. We have high inflation. And if some of the things that are being talked about around the budget announcement next week come to fruition in terms of tax handouts or tax reductions or some sort of income tax boost, etc., that's all stimulatory for the economy. We're giving money to people to go and spend. That's not what you want to do in a high inflation environment. So I think that there's a bit of a disconnect. The Reserve Bank are trying to slow down inflation, and the government, surprise, may actually be causing a lot of it. We know they already were before, but if they keep on doing what they're possibly going to do next week, yeah, it's pulling in two opposite directions.
I think the real sort of impact might not happen straight away with this particular increase, but potentially if we have another couple towards the back half of the year, it might start to slow things down a little bit.
Yeah. And it's all going to depend on inflation as well and what's happening overseas, however long it goes for. I think the Treasurer was saying today or recently that they're forecasting inflation to go up to about 5% by the end of June. So continue to tick up. So even if rates stay the same for a little while, inflation will have a bit of an impact. But look, at the end of the day, we've gone through a lot of these graphs, and we've talked about this before as well. Rates go up for a reason, but if we go through a bit of a more challenging period for the economy, what happens after that to try and recover from it? Rates come down. So they're cycles. They go up, they come down. This period will also pass like every other period. And it's if you have the right positioning and the right strategy at the moment, and over the next few months, there's some really good opportunities to then ride the next wave once it comes.
Yeah, if they can hold on. Everyone seems to have a different opinion. I know you and I, Hugo, met with a good broker earlier in the week, and with his book of clients at the moment, that little increase in interest rates he thinks is going to actually hurt some of his clients quite a bit, and that little increase is going to make a big difference for them. So, everyone's different. Everyone's got a different opinion on things, right?
Yeah, absolutely.
One,
And that's why you've got to only do what you're comfortable with doing. You don't want to overstretch yourself. I've seen a few videos and podcasts of some of our colleagues indicating that the right thing to do is stretch to the maximum and push beyond your budget. What matters is just for you to buy something no matter what. That's not the case. You've got to take everyone's personal circumstances into account. You don't want to cause unnecessary stress during these periods where people are genuinely struggling to hold on to their investments, right? It's a long-term game and you want it to be sustainable and enjoyable throughout the process.
the thing that concerns me is with this is late last year we had all that surge into the market of first home buyers under the new government scheme. For 50,000 deposit in Brisbane, you could go up to $1 million in finance. It's a $950,000 mortgage. Now, since then we've had 2, maybe 3 interest rate rises. If we have another 2 or 3, and those people who were into that market, if you're a first home buyer and back then your mortgage at $950 was around $5,800 a month. All of a sudden, if you add 4 or 5 interest rate rises onto that, I think they're the people that are really going to feel the pinch. And that part of the market that really flooded between 800 to $1 million, it'll be really interesting to see what happens there.
Mate,
Yeah, sure.
you just mentioned something really important. There's also that help to buy scheme where you can actually have as little as a 2% deposit. The one where the government takes up, I think it's a 30 or 40% equity stake in your property.
Yeah.
If you think about that, even if there is a downturn over the next few months, properties can go down more than 2%. All of a sudden, you're over leveraged and your property is worth less than the total loan that you've taken up. So
That's
why
okay though, Hugo, because the government is the part owner of the house. I'm sure they'll make up for any shortfalls that you have. So shouldn't have any issues there. They'll be happy to
Oh,
wear the
yeah,
losses.
of course. You know what? They will make up for it because they'll come up with other ways to stimulate the real estate market anyway and bring the prices back up. So
Yep.
indirectly, they'll make up for it for everyone.
Look, Noosa Sunshine Coast over this week, it's been an interesting one. Similar to what you've been talking about in Brisbane, Nick, we have seen listings start to increase. There was, it was pretty tight previous weeks, but this week it seems to be that we've got a lot more stock starting to come on the market. One agent in particular I was talking to this week mentioned that it was the most stock that they've been holding, will be once these properties come on the market. It'll be the most stock they've been holding for a long time. So it'd be interesting to go from a low stock market to an increase in listings in a high stock environment in the space of maybe a couple of weeks. We're going to watch that very closely and see what happens. It's been pretty competitive out there for us. We've been looking to buy for a couple of clients over the last week, and everything we go to buy, it seems like we've got competition on. So low stock, probably low buyer numbers, but still a fairly competitive market, which is probably underpinning the prices that things are selling for at the moment. A couple of decent higher end type sales going, settling over the last week in Noosa. People are still spending money in that part of the market as well. On top of all that, we've had a bit of an increase in inquiry for our services in the last week. So it'll be interesting to see how that pans out into a market that we might get an abundance of stock come on over the next couple of weeks.
Yeah, I think what you're getting is the more committed buyers and the ones that are in a strong position and can buy are still out there. They're just being more selective and picking the right properties. The rest, the ones that were indecisive or weren't sure, may not be in the best position. They were hesitant for the last few weeks, but now they may have just dropped off altogether and just holding off after this interest rate rise plus the budget announcement next week. Can we talk a little bit about agents, just in general? All I wanted to say, I don't have a specific exact. I have several of the same, but this week I've actually had a really positive. Most weeks I do, but I've had a really positive experience with agents in general. I've come across quite a few that, are being genuine. They're open. They're transparent. There's no smoke and mirrors, and genuinely trying to work together and understand that we can make life easier for them and for their vendors as well by having committed and vetted buyers. I had literally 2 mention to me how pleasant it is and has been dealing with us.
There's certainly some agents down here that are great to work with. The interesting thing is that talking to some of them this week, the biggest thing they're noticing is that perhaps newer agents or different agents are starting to drop their commission rates, which is a really interesting way of approaching the market. Not sure that would be, if I was selling a property, I don't think that would be the first thing I'd look at is who's the cheapest. It would be who's got the best track record, who knows what they're doing, and who's going to maximize the return for me. And with the market as it is, I think we'll see over the next few months that the good agents that have survived many different property cycles, they're the ones that will thrive, and the ones that perhaps haven't seen too many changes in the market, it might be a little bit more difficult for them than they expect. So, yeah, good agents will always continue to thrive, but what a commission rate an agent charges certainly wouldn't be the first thing I'd be looking at when I go to list my property.
No, you make a really good point, Nick, and that's because you're informed, you're in the market all the time, and you can see the behaviour of a really good agent pushing as hard as they can to get the best outcome for their seller versus an agent that might be inexperienced or not as good, getting a far lesser result. I always say it, always have, that if you go for the cheapest agent to sell your house, it's going to be one of the most costly mistakes you make. It's going to be, people don't sell houses very often in their life. A lot of those people that sell their houses are very ill-informed and just don't have any interest in our industry and what's involved. And they might just see the cheapest option as the best option. But in 99.9% of cases, it's probably the worst option and very, very costly in the end.
Yeah, well, if your first action is to discount what you're charging, how much do you actually value what you do? Real estate agents, obviously, the successful ones make really good money, but they work down hard as well. I think it's just a false way of approaching things, just to go with the cheapest, like you said, Jace. Go with the ones that provide the best value. And if you pay a little bit more, but they get you a better result, that end result's all that matters.
A lot of it is diversionary as well, right? If that's the right word. By dropping your prices, you're trying to divert your potential client's attention to the price versus what's actually being offered and the value. I think I said this a few weeks ago, but if your first criteria or the first thing you're looking at when selecting, even with us, with buyer's agents, but when selecting any sort of service is price, then more than likely you're going to get the wrong one. You need to base it on the value that you're going to get first. If you find a few that offer very similar value, then sure, compare the costs between those ones, but don't start with the costs. If you think about even just something much simpler, a transaction that's much simpler than real estate, buying a car. You know the features that you want in a car. Then you go and look for it and you try and find the one that's the best value or potentially maybe the cheaper one with those features. You don't just go, I need to buy a car. Which one's the cheapest? Oh, I'll get that one. And then you realize it doesn't have the features that you needed in the car. That's not how it works.
No, you're absolutely right. It's actually in our industry, choosing a selling agent, you can get, there's a lot of access that we have to data, average sale price, volumes, and a whole bunch of things. So it's not relatively easy to be able to go and see who's doing what and who we think is getting good prices for things. But, too often people do go for the cheapest option.
Mm-hmm.
Buyers agents are just the same. There's a lot of buyers agents out there that try and say they do the same thing, but not sure some of them do what they say a lot of the time. So it does come across to our space as well. If a selling agent's charging 2 or 3% of the sale price as their fee or their commission, versus someone who's charging 1%, if that 2 or 3% can get the seller an extra, 3 or 4% on top of what the 1%er will get, so there'll be a big difference to the end result.
Absolutely. Couldn't agree more. Can I just ask, on another note, you two both did the Sydney half marathon last week. How'd we pull up?
Saw big turnout. Big turnout. There's like 30,000 people there.
Oh, was it?
Very.
Oh, wow.
Yeah. How'd you pull up, Hugo?
Mate, it was an amazing experience. Jason said 30,000 plus all the family members and supporters that were there throughout the course and at the finish line as well. But it was definitely challenging. Full marathon for Jason, I believe. I'm retiring while I'm ahead. This is the end of my running career. One and done.
It's all up to you.
Yeah, well, at least we both made it. That was the first time we'd both ever done a half marathon. So I'm just thinking, at my age, if I don't try and go for a marathon now, I might not get a chance to do it. Tick that one off the bucket list potentially. Yeah. I'm not 100% committed just yet.
No, have a crack. You can do it.
Are you going to do it with me, Nick?
No, but have a crack. I'll cheer you on.
Hugo said he's going to do it with me.
Good on you, mate. It's a long
Very
one.
good. Anything else you want to mention?
No, interesting times ahead. Obviously, we've got the budget this week. I think it's Tuesday night, isn't it? We get that. So there'll be a lot of media about that on Wednesday and Thursday, I'm sure. So it's important to listen to the right people and just not believe any hysteria, and actually try and cut through all the rubbish and decipher what it actually means. And I'm sure we'll have a chat about that next week as well.
Yeah, and there's a few more topics that are going to potentially directly impact the property space this time. So we'll definitely be watching that very closely to see what comes out and how that's going to impact people.
I think I said the other day, Jace, the key is to just zoom out is the easy way to look at it. You're not investing in real estate for 3 months or for a month or for 6 months or a year. And that's how long these things may last for. You're investing for a hell of a lot longer. And when you zoom out, you actually see that things are fine in the end.
Yeah, it's good advice.
Absolutely.
On that note, thank you everyone for listening. And don't forget to follow our podcast on your favorite podcast platform, Around the Grounds. See you next time.